The seller's market in UK real estate is dead. I mean, that is the short version of what we're looking at today.
Yeah, it really is.
For years, if you owned a prime property, you held all the cards. You set the price, you set the timeline. But we have a new report from Savills looking at the second quarter of 2025, and it shows a total inversion of power.
Right. It's a buyer's market in the truest sense now. We aren't just seeing a slowdown, we are seeing an actual retreat. The market is, basically exhaling after holding its breath for 3 years.
And that exhale is wiping out value in very specific places. So the mission for this deep dive, for you listening, is to figure out where the smart money is actually going. Because the data suggests the famous commuter belt is physically shrinking.
It is. And the whole race for space that we saw during the pandemic has just hit a brick wall. The Savills data is fascinating because it quantifies what they are calling the Great Reversal.
Great reversal?
Exactly. In prime central London, prices dropped 1.5% just in the second quarter of 2025 alone. Year on year, they are down 3.7%. And the regional prime markets, the countryside, they're down nearly 3% too.
Okay, but down is a relative term, right?
Yeah.
What is actually driving this? Is it just interest rates, or is there a structural change in where people actually want to live now?
Well, it is structural. Lucian Cook at Savills points this out specifically regarding the commuter belt. During the pandemic, the definition of commutable expanded wildly.
Right, because you only had to go in maybe once a week.
If that. So people moved deep into the countryside.
Yeah.
But now, that elastic has totally snapped back.
The return to office effect strikes again.
Precisely. The belt is contracting. Demand is shifting back to suburban markets, places where the train to London is under an hour. The dream of that deep countryside estate is fading because the reality of the Tuesday morning commute is biting hard.
Which completely explains why prices in those deep country locations are softening. But surely price growth isn't dead everywhere. I noticed the data shows the north of England and Scotland are actually up slightly. Why are they immune to this?
It is a value play. The North and Scotland just didn't see the same overheated, explosive growth that the honeypot locations in the South did 3 years ago.
They have more headroom.
Yeah, they do. But if you look at those southern honeypots, the places everyone was fighting over in 2022, the drop is brutal.
Brutal is right. I was looking at the coastal data in the report. That seems to be the epicenter of the crash.
It is a bloodbath compared to the peak. Prime coastal markets are down 6.7% in the last year alone. But if you zoom out and compare it to the 2022 peak, they have lost nearly 16% of their value.
16%. That is a massive correction. Is that just a lack of demand, or is policy playing a role here too?
It is policy biting the discretionary buyer. You have higher council tax on second homes and stamp duty, the transaction tax you pay when buying has ramped up. Buying a nice-to-have seaside cottage has become incredibly expensive just to hold on to.
So the casual second home buyer has basically left the chat.
Exactly. But this creates the real opportunity aspect of the report for you if you're looking to buy. Because the speculators are gone, the discounts for actual homeowners are significant. Savills crunched the numbers, and a prime 6-bedroom family house in the south of England now averages £2.4 million.
Which, let's be honest, is still a fortune for most people.
Oh, absolutely. But context is everything here. That same house would have cost £2.68 million in September 2022. That is a £280,000 discount.
You are essentially getting 3 years of inflation and a brand new supercar thrown in for free compared to the peak.
That is one way to frame it. And if you look at London, the value gap is even more historic. Prime central London prices are currently trading 21% below their 2014 peak.
Wait, 2014, we are talking about prices being lower than they were over a decade ago. That sounds like a market in severe distress.
Or a market that has finally flushed out the froth. Alex Christian from Savills notes that the non-DUMs, the wealthy international residents claiming tax status outside the UK, have largely pulled back due to tax uncertainties.
Ah, so the investors flipping condos are gone.
Right, they are gone.
So who is actually buying these places then?
People who need a roof over their heads, domestic needs-based buyers. They are moving because of marriage or schools or jobs. They are price sensitive, they take their time, and they negotiate hard.
But they provide a floor to the market that speculators just don't.
Exactly.
It sounds healthier, actually. Boring, perhaps, but healthier.
It really is. The frenzied bidding wars are completely over. If you have the capital, you aren't scrambling anymore. You have the luxury of choice.
So here is the question to end on for you listening. We have London prices reset to 2014 levels and coastal properties on a double-digit discount. Is this a falling knife you shouldn't catch? Or is this the single best entry point for a domestic buyer we have seen in 10 years? And perhaps the bigger question to mull over is, how quickly will the developers adapt to this new normal before the supply completely dries up?
That is the multi-million-pound gamble right there.
Indeed it is. Thanks for joining us on this deep dive.